Well, hello, everyone. Welcome back to another episode of Small Business Stories. You know the voice, Loralyn Mears, aka Dr. LL, your host. And every week we bring you amazing guests. This week, our guest, Marcia Dawood, SEC chair, angel investor, author of Do Good While Working Well, with a new book coming up, Unapologetic Wealth. And she's got a podcast where the angel next door. And so we're going to talk about that because she's a podcast pro. So we're just going to dig right into everything. Hello, Marcia. Welcome to the show.
Thank you so much for having me.
Well, it's always exciting when you bring on other podcast folks. And I know when I've been a guest on people that have their own show, it's kind of fun to be on the other side of the lens, isn't it?
It is. It is fun. Yeah, for sure.
All right, let's get into some things. So, first of all, let's just talk about the whole movement in and around angel investment and how that has shifted in the last couple of years.
Yes. Yes. I was invited in 2012 to my first angel investing meeting. And I remember thinking, cool. What is that? I have absolutely no idea what angel investing is. Never really heard about it. And I thought, well, does it have something to do with the stock market? I really had no idea. Anyway, I went to the first meeting and I got to see entrepreneurs talking about the different innovations they were working on. And I thought to myself, have I been living under a rock? Like, where have I been? This is really cool stuff that people are doing. They're doing all this innovative work. I had been working in corporate America, so I was like doing the same thing all the time, you know? And I thought, wow, this is really, really fascinating. You mean I could be a part of this? Because I had thought, like many others, that you have to be rich, you have to be well connected, you have to be invited, you have to have a finance degree, you have to know all these things before you could participate. But that's simply not true. Maybe back in like the 80s, 90s, it might have been true, but it's really, really changed a lot. And nowadays, anybody can invest for as little as like $50, $100 on an equity crowdfunding platform, which they've become a lot more popular. So it's very, very accessible for people to like kind of dip their toe in the water nowadays and learn about it and be able to invest in the change they want to see in the world.
Do you think Mackenzie Scott has been a catalyst in this area of your whole ethos, right? Doing good while doing well. Do you think she's a catalyst in this? How do you think she's changing the game?
Oh, 100%. I mean, but keep in mind that she is definitely on the charitable side, which is wonderful. Our charities, almost every single one of them will tell you that they are extremely underfunded. So, what she's working on is incredibly, incredibly admirable. And I am super happy that she's doing it because these 501c3 nonprofit organizations, they really do need a lot of help. They're on the flip side of that, and it like almost in complement to that is a lot of innovative companies are out there very small when they start and then they hope to grow and become a part of a bigger company, and they're doing a lot of the type of work that some of these nonprofits are doing. They're just doing it on the for-profit side. So I like to talk about it in complement. They're in no way a competitor to each other because what they're both trying to do is solve a big problem, and both are against the same odds, which is they are really struggling with funding. So somebody like Mackenzie Scott can come in and really change the game for a lot of these nonprofits. So what we have to do on the for-profit side is see what we can do in order to help those businesses grow and scale. And then hopefully together they can really start to solve some of these very, very big problems like curing cancer or, you know, different diseases or climate change. I mean, these are really, really big things that we can't just expect like a small nonprofit or a small startup would be able to do on their own.
Let's talk about the changes and shifts related to which industries, which fields, which areas are being invested in, and who is being invested in. And specifically, where my question comes is as a female founder of a tech company, oh my goodness, I've watched the ebbs and flows. 2023, woohoo! Investment in female owned businesses climbed to a 2%. And it's been falling ever since. So,
Yeah.
what's going on with that? Let's tackle that part first, and then let's get into the which industries, fields, technologies, business problems, challenges are being invested.
Yeah. So I wasn't an angel investor for very long, or even like, going to meetings or whatever. And without hearing about how little funding was going to women. And I remember thinking to myself, wait a minute, we're like 50% of the population. We only get 2% or 1% or whatever it is of the funding. That seems absolutely crazy, right? And so that is the case, especially with the bigger dollars. So when we're talking about venture capital, we're talking about funds. That's where there's managers who will manage the money of other people in order to invest in private companies. Angel investors tend to be a little earlier in the game. They're helping the company in a lot of ways. Yes, with funding usually, but also they could be advisors, mentors, helping with their expertise, helping with their network. All of these things are great, but the amount of money that's actually going to women is so small. And as you go up the food chain, kind of like to these bigger and bigger dollars, then the numbers get even more sparse. What we're starting to see, especially at the Angel Capital Association, because we do data reports every year, is that at the angel level, it is starting to get better. So there is a bright light. There's some good news that women are starting to become investors more, which is really what we need. This is my opinion, but I always say that if you want people to get funded, people of all gender, races, everything, you need people who look like them writing the checks. That's just the human nature. So how do we get more women involved in writing checks? We have programs at a lot of these angel groups throughout the country, and this could be anywhere, not just in New York or San Francisco, but really anywhere in the country, helping to educate and make women feel more comfortable with writing checks and also lowering that barrier to entry. So yes, there are some times that you can invest for even as little as $100, but that used to be that if you wanted to invest in a company directly or you wanted to invest in a fund, you might have to have 50, 150, $250,000. That's like crazy for, that's just not sustainable for a lot of people. So how do we make that more accessible? Well, now there are funds out there that you can invest for even $5,000. So the barrier to entry has come down and the education level has come up. And I think that's what we need to start to see. And then we'll start to see more of a shift. So I think we reported through the Angel Capital Association recently that about 25% of the money is now going to female founders at the angel level, which is great, right? Now we need to take that, to the next level and the next level so that these female founded companies can actually grow and scale to bigger dollars and get that funding as well.
I'm going to insert one more question before we get to the types of things being invested. So, on that path with angel investment, one of the things that I've seen on that end of people targeting and helping other clients or myself to get funding, angel investing, when I was part of it with different clients or startups that I worked for pre pandemic, like in those years before it, it was really all about a relationship. Yeah, a reasonable good idea, reasonable chance. And then I saw the shifts with the 2022 downturn and some of the
Mm,
economic pressures and headwinds that, like you said, it
yes.
gave rise to these micro investing platforms, but it also pulled down the amount of money going in as a general pool because angels like yourself went, yeah, wait a minute, I didn't have such a good year last year, so I don't have as much to, invest in everybody else. And what I've seen is a shift now. Angel investors are increasingly demanding, and rightly so, metrics and approaches and things that look more like a venture capital series A set of demands than it did for angels. Is this consistent or is this changing?
I think it is a little bit. And you bring up a good point about how angels feel, based on previous times, right? So think about as we were coming out of the pandemic, the interest rates actually started to rise. So as that was happening, people in general were thinking to themselves, wait a minute, I don't really have to put my money into, I can actually put my money even into like a money market account or something that's really relatively safe, and still be getting, maybe even 5, 6% interest rate at the time. That obviously has since come down. But, I think that angels, because they're writing checks from their heart, they're writing checks directly out of their checkbook. They're not at the venture capital level, as far as like managing other people's money for the most part. Then I think it is something like sometimes we'll feel poor. So we're thinking, oh, well, we didn't have a very good year last year. So now what are we going to do? Well, we're going to back off. So many people I've talked to, because we did think that 2025 was going to be kind of like a rally, so maybe we'd have some more liquidity, we'd have some more exits. So then people would think, oh, well, I got some money back. Now I'll put that back into the economy by investing in another early stage company. But that didn't really happen. The exit market hasn't really started to come back yet. I think I'm very hopeful. If I get out my crystal ball, I'm very hopeful that in 2026 we're going to start to see more. I personally have started to see a couple more companies, like within some of the funds that I invested in years ago, starting to make some progress. So I think we're almost there. But yes, you're right. It can be like a little bit of an emotional roller coaster too when you're talking about investing and making those decisions.
I've seen it in some of my clients, and I promise we will come back to the what's hot and what people are investing in. I promise, I promise. In some of my clients, the expectation is that, well, you're an angel, you're rich, I need the money. Like, why can't you just give it to me? Like, what's the problem?
Ugh,
And I'm thinking, whoa, 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 whoa. You don't understand how this works. Angels are angels with wings and halos because they're taking out of what they have built to give you a chance. They're not obligated by any means.
that's
And
right.
I won't work with some of the clients who see that as really that they're entitled to your cash.
hmm Oh yeah, I can't tell you how many messages I get on LinkedIn. Like I'm a human ATM. It's crazy. It's absolutely crazy. I mean, angel investing is a very risky asset class. I've said that multiple times. I've written a book about it. I mean, it's like you have to be able to manage all of your assets as an investor of any kind. So if you have chosen to be a part of the angel investing world, you really, we talk about it at the Angel Capital Association. We really don't want people to invest more than maybe 5% of their overall investable assets in an asset class like this because it just is extremely risky. And in a lot of cases, you can't say, hey, in 2 years, I'm going to need that money back so that I can, go on a vacation or pay for my kids' college or whatever the story is. It doesn't work like that. You might be waiting 5, 7, 10 years to get
Sure.
your money back if you're lucky. In a lot of cases, these companies don't make it. So you're really having to diversify your portfolio and do all those things. But when I hear that type of entitlement, like, oh, well, you're an angel investor, you must be rich. And that's really 100% not fair because nowadays people can invest for as little as $100. They do not have to be an accredited investor and they can put on their LinkedIn, they can call themselves an angel investor because 100% they are. But that does not mean that they are, overly wealthy and just have disposable income. I mean, somebody we talked about, Mackenzie Scott, that's amazing what she's doing because she's saying, look, I have been given this opportunity with this money. I want to do good with it and I'm going to be very bold about it so that other people will want to be bold too. And I love that. But she's in a very different position than the rest of us, right? So we have to be able to think about it and be respectful of the people that we're trying to work with. Like, I think to myself, that entrepreneur who just treated me like that, they have lost their option to even have me look at what they're doing based on how they approached it.
Yes, bingo, bingo. I'm not surprised. Just that is, like I said, the whole ethos of angel investing, that there is some connection emotionally, either
Yeah.
to the person, the team, or to the cause.
Yeah.
And so, yeah, it's like I said, I ignore clients like that. So let's get to the question that I've been avoiding but asked like 50 times. What is hot, Marcia? What are people investing in? What are they looking for? What's going on right now?
Yeah, so of course AI is a hot word. Okay, but let's break it down a little bit. And then I'll talk about some of the other industries. But so what I get concerned about when somebody says, "Oh, I've got an AI company," they're all excited about it. I want to know, what is the real problem that you're solving? There's a lot of artificial intelligence companies out there. There are a lot of tech companies out there doing a lot of different things. But what is it that you're truly solving for? In fact, I not real recently, but maybe a year or two ago, did like a seminar about how can we really do diligence on AI companies, because what are we even looking at? And it changes so fast. So, how would you even know if you're doing a good job by investing in this company? But it came back to all the experts that we talked to said, listen, you have to look at the actual problem that's being solved. Look at what the company is doing. Stop watching like exactly what the tech is and really start to think about the nuts and bolts of what is going to be the customer's experience. What is it that's going to change their behavior if it needs to change? Or what are the things that they are suffering with that they don't like and that could be changed with this new solution. So I think that is something like when we're talking about like, oh, AI is hot right now, be careful because yes, there are some companies where AI is really hot, but know exactly what that AI company is doing and how it's going to help at the end. And the best question is, how are they going to make money? I can't tell you how many times I've asked an entrepreneur, so how is it that you make money? And they're like, oh, well, what we're trying to do right now is just get our customer numbers up, and I'm like, no, no, no. Making money is important. Okay, so you need to actually do that. Okay, so then the other things that I'm seeing is women's health is getting more, not of course not as much as it should yet, but it is getting more attention. So I am seeing more companies that are working on very specific things in women's health that we haven't seen in the past, which is just amazingly wonderful because there are things, women are not little men. So even like what drives me crazy is like if you even look on a bottle of aspirin or something like cold medicine or whatever at the pharmacy, it'll say adult and it'll give a dosage. But that adult, they're talking about the same adult man. Like my husband and I are not the same size. We are not, even close to the same weight. So like, how does that even work? So those are the types of things that I think we need to have more specific clinical trials, more specific things that are geared toward women's health. And it doesn't mean all reproductive health. I'm talking about heart disease. Women have a higher rate, as we know, of heart disease than men. But has there been enough studies specifically on women for heart disease? No. So these are the things that I think as we start to really take a look at what's being done out there, look at the innovation, look at what is going to help really make innovative change in the areas where we want to see the change. So we as consumers, and I mean consumers not just of like physical products, but like consumers of everything, consumers of healthcare and the air we breathe, the water we drink, all of these things. Those are the things we really have to start to think about as we look to invest and think, well, if these are the things that I care about, like I encourage people in my books to be able to take make a list of the things that you care. Maybe it's just 2 things, 3 things, that's fine. But then actually start to align your money with those values that you have.
Ah, amen to that. As a STEMinist, I'm all about finding applications, innovation, technology, science to move things forward, and
Yes.
especially for women, right? That's such a key thing. All right, some questions. So you kind of queued it up there. So you talk a lot in your podcast, The Angel Next Door, and even in your book, which I just started, I did not finish. I will fess up.
That's okay.
Do good while doing well. You talk about aligning capital with values, right? Not just returns, which again is very much in alignment with the angel investment philosophy. Can you share a moment with our audience where the investment didn't look exactly good on paper, but you said, I believe in the people, I believe in the mission, and it's playing out. Have you seen and had opportunities like that?
Yeah, I mean, it's kind of like what we have the saying, you always bet on the jockey, not the horse, right? So sometimes you could have a company and the entrepreneur, they can see the vision and they're trying to explain the vision to the investors and the investors are kind of like I'm not really sure, and then they go and do their diligence, but they haven't quite gotten the whole vision of the company, right? So in a lot of cases, I think we have that. And then there's some companies where you get it right away. You can see the vision of the company and you're just, but now you have to think to yourself, ooh, I got to make sure the right team is around this, because now you need to get the entrepreneur and the team around them to be able to get this to the end result. So yeah, I think there's sometimes, and actually in the last 5 years, because of COVID and then because of all the after effects of COVID and how hard it was to fundraise, there were several companies that really, they not just they didn't make it, but they kind of went down hard. There were a lot of struggles. And I think as investors, that's why we diversify our portfolio. I mean, I can think of a couple companies where there were some mental health challenges within the team, and that that's sad. You hope that they will get the help that they need, but at the same time, it meant that their business wasn't going to make it. And then as investors, we have to know that that's part of the journey.
Yes. And I've seen that personally with a couple of folks, some of my clients, and just in a broader base. I deal a lot with small businesses as someone who supports them. And I'm seeing the level of overwhelm. They can't get loans. According to SBA, last year, at least in 2025, 2/3 of small businesses are subsisting on loans, not
Mm-hmm.
revenues. So that's
Yep.
scary. Let's talk about added pressure and burden, right? And what I'm seeing, even in the last month since the holidays, is there's always that pressure. Oh, it's a new year. Let's get started. Here we go. I am seeing so many clients, small business owners, different networking events, things, and like they're like, I can't, like I can't deal with this right now. I'm like, well, it's your business. We're trying to help and get you. I can't. And they walk away. And it's heartbreaking to see, but I can understand it. I had a level of burnout personally in 2024. I stopped my podcast. I was just like, can't. And I'm
Mm-hmm.
super strong. And,
Yeah.
cancer survivor, domestic violence survivor, like insert, everything. And I'm like, wow. So, what do you think is out there for people? What can they do? What counsel do you want to give our small business owners and entrepreneurs who are listening to our podcast right now about what to do when that mental burden starts to get to be a little bit too much? What do you think they should do? Where can they go?
Well, first of all, I really think it is so important to talk to people. And I don't mean, yeah, of course, yes, therapy is great. I'm not talking necessarily about that kind of talk, but I'm talking like talk to your investors, talk to the people around you. Let them know that like, hey, this isn't like isn't things aren't going so great right now. And here's where I could use a little help. I think too often entrepreneurs, especially women, want everything to be great. They want to show I've got this all together, and they've got it all together at home. They've got it all together within their business, and they don't want investors to see 1 ounce of weakness. But that is not reality. And I would rather be in the boat with the entrepreneur and be like, hey, I get it. Let's see what we can do to help you. And help might mean, therapy or something like that. But help might also mean, hey, maybe you need to hire an assistant for 2 or 3 months to help you. Or maybe you need to hire, maybe we need to kind of tweak how things are working within your business. Maybe we need to help you with more mentorship or other advisors, or help you to get, out there more. But sometimes people don't even want to ask for the help, even to get a connection to a company that they would like to have as a customer. I mean, all of these things, they just think, oh, I can do it myself because I don't want to show any weakness. I don't want to look bad to my, to the outside world of any kind. But that is just not reality. So I think the more we can talk about it, and the more all of us talk about it, and the more all of us say, hey, you know what, I've struggled and I have anxiety, or these things are bothering me. I think that's when we start to be more of a community, And that's what we crave as humans. We want to be part of a community. So how can we do that and be supportive to these entrepreneurs while listening and not freaking out when things are starting to go a little bit wonky. You need to get in there with people, and that's when I've seen companies actually thrive, when they have really rallied their tribe together, rallied the people that they know and they can trust, and they know can help them to get to the next level.
I can't recall because my brain is just full, but recently a VP at a large, one of the top 100 tech companies started talking about menopause and its effects on
Yeah.
women in the workplace. And I thought, wow, this is brilliant. And it's shame on me for not being able to remember his name. But there we go. Like you said, the more that we can normalize the conversations and it's not weakness. Hey, like I'm not okay. I
Hmm.
have a lift, right? For the next 3 months, give me a little bit of that extra support. It can make such a huge difference.
Huge difference. Huge
Oh,
difference.
yeah. Now, you've reviewed, I don't even know how many, I wouldn't want to put a number, pitches, this, that. What early signal tells you there's something durable here and it's not just like, whatever, the whatever du jour, something of the moment? What gives you that cause for pause and you think, oh, I'm going to look a little closer at this?
Yeah, I would have to say that too many times I see entrepreneurs that they want to fundraise like really early. And that can be a bad decision for a couple reasons. One, they really haven't like kind of flushed out exactly what their product is, how they're going to market it, what their customers really want. They haven't done enough customer discovery. And then they kind of get this again with the entitlement mindset where they're thinking, well, I'm just going to get somebody else's money and I'll try it. Right. So, what really sparks my interest is if I see an entrepreneur that has bootstrapped, has really built something kind of on the back end themselves and really thought to themselves, well, I've been talking to my customers. I know what they want. I've given them, the prototype, let them just, play with it, destroy it, whatever they can do so that I can make it better. And something that comes out of a real need. When I see an entrepreneur that really had a problem that was so sticky, they said to themselves, I hate this problem so much and I'm trying to find a solution. I can't find it. I'm going to go make it myself. That is when I say, okay, I think I need to take a better look.
Gotcha. Now, you've helped so many women by demystifying the process. So, everything from your podcast, right, The Angel Next Door, to again, just what I'm starting to see even on your book as far as do good while doing good, while doing well is all about the investor side to be an angel investor. But it, of course, it echoes what you expect to see in what women who are trying to apply, or anybody really, not just women, female founders looking for money, what we need to think about. But did you have to unlearn anything about investment when you took on this role? You said over a decade ago now of being an investor.
I mean, I didn't really know anything about early stage investing. I remember sitting in the meetings and hearing the words that people were saying, and I thought to myself, well, I don't really know this, so I don't really belong here. But that simply is not true. And I had a lot of people who were very welcoming and very supportive. And yes, there's a bit of a learning curve, but I always say that angels should never go solo. You should always be in groups, whether that's with an angel group, an angel fund, just talking to other people, doing diligence together. And that's how you get to know people. It's really like what I call my golf course because I don't play golf. And I would get upset when I'd hear my husband talk about all these cool people that he got to meet. And I'm like, well, how come I don't get to meet cool people? And then I started doing angel investing. I'm like, hey, I got to meet some cool people. It's pretty neat. So,
Without
there's,
golfing.
yeah, yes, yes. So there's all these pieces to it. So I think you end up learning more about the whole investing world. I actually learned more about just investments in general from learning about angel investing. But I think it's something that it's individual to every person. Everybody's risk appetite's a little bit different. But I think that when people know that it's something that's approachable and that they can kind of dip their toe in and without necessarily having to think, oh my gosh, it's all or nothing. Like I have to write this huge check or I can't do it at all. And that's just simply not the case anymore, which is what I really love about it.
Do you think women, like female founders, conflate impact and profitability and kind of get wrapped around the axle of either needing to sacrifice growth and scale uh, to have the impact that they should make. I mean, where do you see women on that, on their, really on their, I guess, what they perceive to be their worth and what they can command or request from angel investors? Do you see that?
Oh yeah. In fact, it kind of drives me a little bit crazy, which is why I wrote my second book, Unapologetic Wealth, because I was tired of seeing women playing small. You know, they really
Exactly.
are incredible investors. They don't think they are yet because we really haven't been women in general have not been given the ability to showcase what they can do with money because we've always been told, "Oh, you're the one who's the consumer. You just buy the groceries and you're the ones who pick out, the clothes for the kids or whatever." But in reality, women are great with money and they are really, really smart. And but they think, oh, well, that wasn't something that I was taught as a child. I wasn't really taught as I was growing up. And women in general are not really told, like, oh, investing is your thing. Men, they go into a room together and they're like, hey, how are you in for 50K? And they're like texting each other the next day and all stuff. I mean, we just don't function like our brains do not work like that, right? So when you find a female entrepreneur, like she is going to do everything she possibly can to make that business grow. And she's going to take every dime she has and stretch it as far as she can. And that just shows how much women are good with money. But what we have to do is take that and ramp it up a little bit, get that bold part of her to just really start on fire so that we can get the playing small to stop and go to that boldness that men have. Because imagine if we could put the boldness and the fact that women are so smart and good with money together. Wow, we're gonna. I think like in a couple years from now, we're gonna see a very different type of landscape when it comes to women-led companies.
Ooh, I love that vision. Yes, Marcia,
Mhm.
right? This is where we've got to go. I want to come back to your books though. So
Yeah.
Do Good While Doing Well has sold many, 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 many copies, hundreds of fantastic five-star reviews. But you've got a new one coming up here called
Hmm.
Unapologetic Wealth, and you've alluded to it, and we've mentioned it just a couple of times. Can you give us that little, oh, I don't know, the little preview before it goes on
Yeah.
sale for pre-order? Why
Yes.
don't you pick this one?
Yes. Yes, well, it is on sale for pre-order now. We'll make sure to put a link in the show notes. Um, but what happened was, first of all, I would consider myself a spreadsheet person, not necessarily a writer, right? However, I'm now a writer. And people have told me you have to own that. I'm like, okay, I'm owning it. Okay, don't play small, right? We just talked about this. Hello, right? So my first book, Do Good While Doing Well, is really about demystifying angel investing. And I thought, well, if I could just like really simply break it down for people, maybe they would feel more comfortable. And the fact that you can do it for, much less dollars than you did in the past. But then as the book came out and I started talking to more and more women, they would say to me, you know what? I really love this idea. However, I'm not even sure like how where my bank accounts are. Like my husband does a lot of this stuff. My financial advisor does this. I don't really have a handle on it. And so I feel like you're asking me to do something that is so foreign and I'm like here back at like the beginning and I'm still like confused, right? So I thought, oh, okay, I think what we need is a prequel where we talk about why are we here? How did we get here with this money mindset and how can we change it? And if you think about like dowries, if you think about the way women have been treated just for centuries when it came to childcare and the role that women played, the role that men played, I get it. We're not mad at men. We're not mad about what. No, but what we have is a very unique situation right now. There's opportunities that our mothers, grandmothers did not have. So how do we not only take those opportunities ourselves in this particular moment, but how do we make sure that our future generations, our daughters, our nieces, our granddaughters, how do we make sure that they feel that they can take the opportunities without this limiting belief mindset? So that is what I really started to look at. So I went out and I said, hey, who has money stories they want to tell me? Oh my gosh, I was flooded with people wanting to tell me their money stories, and a lot of them are in the book. All, of course, all identity was protected, but there's tons of really interesting stories about how, not only how did we get this mindset, but also how can we start to say, hey, wait a minute, we don't have to keep this mindset. We can take advantage of the opportunities. It's not going to happen overnight. We're always going to have that little voice in the back of our head. We're not going to completely get rid of it. But how can we say, I'm going to feel more comfortable? I'm going to feel more aligned so that now I can make decisions that I feel good about with my money, and I can make my money work for me. And sometimes making your money work for me, yes, could mean I'm going to invest and I'm hoping to get a return. But it could also mean like I'm going to hire someone who's going to help me, and that's going to free up like 4 more hours during my week or whatever the story is. So that, we always hear from women, I just don't have enough time. There's not enough time for anything, right? So, but then you also don't want to see the woman who's like, well, I don't have enough time, but I'm going to get the fancy car and I'm going to live in the fancy house and buy a fancy, like, okay, we don't need to do, if you could take some of that money and actually align it so that now you have more time and you have more, you feel more at ease, you feel less anxiety. That to me is way, way better. Now that's of course just my opinion, but better than the fancy house or the fancy car, right? So really starting to think about what do you care about and how can you align your money with it?
Oh, definitely. Like that's like win with the capital W right there,
Mm-hmm.
right?
Yeah.
What you talked about. Because time is money. And if you play the game of trading time for money, you never, ever move forward.
That's
You
right.
never get to the place that you want to be. Now, one of the things that I've really appreciated in getting to know you and doing research on you is that you pair intentional investing without losing the heart in it. And that's a really,
Yeah.
like I said, a really big thing. And, not everybody has that and has that approach. So what I'm curious, and I'd like you to leave our listeners with this, as you look at different founders that you've built relationships with over time, and not just those that you invest in immediately, what makes you like want to keep watching someone's journey and say, oh yeah, not ready yet, but something. What's
Mm-hmm.
that spark, Marcia, that pulls you in?
Yeah, I think a lot of it is, you tend to fall in love with the entrepreneurs. I mean, they really are doing amazing things. They're visionaries. They have these incredible ideas of how they're going to, help the world and how you can help in the process, whether you're investing money or investing your time or just, helping them as a cheerleader, following them on social media, whatever the story is. But I really think that is the spark because you might meet somebody and they're working on something and it might be their next company that you end up being a part of. And you just never know. But you can really tell when you meet a founder who is like a serial founder, like they love building companies, they love doing stuff like that. Those are the people that you want to follow because it's not just their first company, it's their second and third company that are going to like really start to change the world.
Truth, right? Because we've got to make all the freaking mistakes in the first one or two rounds, right? I mean,
Exactly.
right?
Yes.
Yeah,
Yes.
lived experience, as they
Hmm.
say. Yes.
Yeah.
Now, of course, in the show notes, we'll include links to your book, but where can people find you, Marcia? What's the easiest place for them to go look?
Yeah, so super easy. MarciaDawood.com. My website has everything. In fact, I I had so many people asking me specifics about the podcast that I made playlists on my website so that if you wanted to learn about like women in business or let's say you wanted to learn more about equity crowdfunding, you can just click on those links and it'll show you the episodes that are related to that topic. Because I found that I would be talking to somebody and they'd be like, oh, and they'd ask me a question about maybe it's using philanthropic capital or something like that to invest. And I'd say, well, oh, you should go back and listen to this episode and that, and then they'd be like, well, I don't even know what you're talking about. How write it? They're trying to write it down. I'm like, okay, let me make it super easy. Just go to my website. You can see everything right there. And then, of course, there's everything about the books. I do have a bunch of resources. And in fact, if this episode's coming out and my book isn't released yet, the new one on apologetic wealth, there you can read chapter 1 already. It's already up there. It's like a sneak peek, and then you can also listen to the introduction from the audiobook.
Excellent. And I love that you have curated playlists because you have 160 plus episodes and it's really easy. We've
Yeah,
talked about people being overwhelmed in general. It's like, no, I can't figure it out. Like not one more thing, right? With a good
that's right.
intention, we'll go there and like, no. And then we exit, right?
That's
That's the
right.
whole thing.
Yeah.
All right. Last question as we wrap up our show. It is my signature question. Asked almost 300 guests this question. If we got to peek into your closet and there was a pair of footwear in there that personified who you, Marcia Dawood, angel investor, is, are we looking at boots, flip flops, or what are we looking at, and why does it represent your personality?
Oh, that's so funny. So I love this question that you ask your guests. Because like nobody who talks about shoes, but we do talk about shoes, right? I would have to say that I tend to be a creature of comfort. So I I will be honest, I've probably bought too many shoes that look really cute and I would try them on and I'd be like, "Oh, they're not so bad." But of course, I'm wearing them in the store for like what, 5 minutes. And then I get home and that they're not really the greatest. But I am definitely the boot girl. Yeah, with the little not like a chunky heel, and then the ankle. Yeah, underpants. Yep, that's me.
Gotcha, gotcha. I know I have done that, as I'm sure every woman I know and who's listening has done that, where I'm just going to squish my feet in. It doesn't matter that I'm going to be really uncomfortable and that it's humid, and by the end of the day, my feet are going to be screaming. And I travel with duct tape because it's better than band-aids to cover over the skin because you've just ripped it off while you're wearing those
Yeah.
really uncomfortable but very cute shoes, right?
Yeah.
I don't do that
Yes.
anymore. I'm over 50. I don't care. Like,
Yes.
I'll wear whatever
Exactly.
shoes I
Yeah.
want.
We do not care.
No, 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 no. And so, with that, Marcia Dawood, thank you so much for being on our show. We really look forward to seeing your book come out, Unapologetic Wealth, and pledge to follow you everywhere you are, your podcast, The Investor, Angel Investor, pardon me, next door. Let's go with that. Thank you so
Uh,
much, Marcia.
Thank you so much for having me.